to a bunch of tax experts on what they make of this triple tax threat on foreign investors. Let's listen in to what they have to say.
P-note taxation is actually a separate subject in itself. And while I would agree with you that it could lead to a triple taxation, in the case of P-note holders, the way a fund would be taxed would be very different from what is the actual tax implication in the hands of the P-note holder. And therefore, it's actually quite absurd all the way. You could have a triple stage situation where one is taxing the gains in India, and if those are exempt, one is taxing the overseas redemption, and if those redemption goes to a P-note holder, there could be a separate set of consequences altogether.
This was never intended to be attracted with a 5% threshold. If you transfer 5% or 5.5% abroad, are you really transferring the economic entity, are you transferring voting rights or control or anything like that in India? Of course not. And therefore, I think it was never intended to apply. And I think the sooner this matter is put to bed, the better it is, because this kind of uncertainty is obviously not helping foreign investments.
The circular technically is not wrong, but when it was pointed out that these are the unintended consequences of just reiterating what the letter of the law is, I personally think actually there is no difference of opinion between the Department of Economic Affairs and the Department of Revenue, and I am very, very hopeful and quite confident that the requisite clarification will actually come from the Ministry of Finance.